It's been a week that's really interesting. I just got back from Washington, D.C., right, Brent, for the AI action plan. I listened to the president. I appreciate that Intel is not actually on your coverage list, but it was interesting that Intel wasn't in the room there in D.C. Alphabet wasn't either. They had their earnings print. Would you say there's kind of one core lesson right now about what's happening in infrastructure in America and what the biggest result of this week has been from the administration?
Yeah, I think the key takeaway is that the AI investment boom is still happening at a rapid rate. There's no slowdown. Google raised their entire capex from 75 to 85 billion on their cloud business, not their ad business. So that's selling Google Cloud to enterprises. And I think it tells you that we're still in the infrastructure build out. We continue to see, the dirt, the energy, the power lines, the core servers. That's really been the focus, and the AI trade has not come to applications. It has not gone to Salesforce or Adobe, to many of those names. They're not monetizing this yet. We think that happens, and that has to happen for AI to work in our view. That we have to go up through the infrastructure layer to the application layer, and so I think that's the next chapter. But I'd say so far, alive and kicking, in doing very well in AI infrastructure. There's been no signs of slowdown. You heard Mark Zuckerberg talk about spending hundreds of billions of dollars in capex just a couple weeks ago. Google just raised their capex by 10 bill, and then we've got Microsoft, Amazon on deck, and we think that ultimately, in our checks, the demand for hyperscaler infrastructure is accelerating, and We're seeing the tariff worries starting to shake off.
Brent, the AI action plan largely focuses on deregulation and expedited permitting. Of all of the companies that you cover where that's relevant, how will it help them?
Well, I think it should help the entire industry. If we have lower bars and lower regulation, we're going to see hopefully a lot more consolidation. I think the one thing we're seeing is there's a lot of companies that say they're AI first. We saw this movie in the internet boom in the 90s. We saw this in the cloud boom. There's going to be massive consolidation. So you're seeing already the beginning of an M&A wave. So I think it'll help M&A. It should help the build out. It should help protect the U.S. in terms of what we're doing as a country in AI. So I think, the president has this right. And certainly you look at our allies in building this. It's a collection of different technology companies. And I think what we thought would happen at the beginning of AI is that we consolidate power to a few, and what we're finding is it's consolidating power to many, and so there's just not enough capacity. Everyone's capacity constrained. Google said they're capacity constrained. Microsoft said they were going to be constrained, but what's happening now is that you're seeing demand get spread all over, and that's actually good for the ecosystem and good for many vendors. Over time, again, I think you're going to see a tremendous amount of cleanup in M&A, and that needs to happen because there's probably going to be too many companies chasing this long term. But short term, I think there's no question we're in an AI boom, and it's really exciting, and I think it's real. I don't think this is fake like we've seen in other tech trends.
It's interesting. ServiceNow, Bill McDermott yesterday saying this is an existential issue for many in CRM who aren't on the AI bandwagon. I'm thinking about to IBM, and they look like they're selling well in terms of consulting into AI. The software bit was a little bit woolly, and people pulled back from what had been a ramp up in the stock. Brent, just before we push forward to what's next week, what did you make of some of the weaker plays and how much they get beaten up this week?
I mean, IBM didn't have a phenomenal quarter. They introduced, a new infrastructure cycle, and that kind of paused the demand. They also are integration Hashi, which is a deal they did, and so the software business decelerated. The point, it wasn't terrible, but the stock had run up, and is almost sitting at the same multiple that Microsoft was at. And I think IBM's a single-digit grower, Microsoft is a double-digit grower. So I think the stock got mismarked. We don't have a buy on IBM. We like what they're doing. We like Arvind's software-centric strategy. So we're fundamental fans, but stock just had a big move, and it kind of didn't make sense maybe where it was at based on the results.
Yeah.
So I wouldn't look at IBM's results and say that they're a proxy. Actually, the CEO upgraded the overall economy from cautiously optimistic to optimistic, and I said, well, what's next? Is there a ludicrous speed, or is there another speed above optimistic? But Arvind has a pretty good lens in what he sees, and I think that was probably the most interesting thing
Yeah.
which is to us that's a good telltale of what's about to happen next week.
Yeah, I mean, Arvind told me he's really looking at M&A at the moment, and also that he's more optimistic about consulting for 2026 than he is about 2025. Push forward then for next week and the optimism around what this means for Microsoft spend, what this means for Amazon spend, and how much their cloud units are growing.
Yeah, so Microsoft, they're on an acceleration path. They've said they're capacity constrained. They're accelerating the guide to an acceleration. We're now, looking at mid 30% Azure infrastructure build. For Amazon, last quarter they put up 20% backlog, and that was up from 14.
Right.
So their backlog's growing, which is a sign of what was going to happen with revenue. So we continue to see right now a continued acceleration across the board. And again, I would highlight, we haven't even seen AI hit these numbers in a big way. I mean, for all these big companies, it's less than 5% of total revenue.
Sorry to interrupt. We just have 30 seconds left, but I wanted to ask that. Is CapEx still the data point to watch, or you want to see top-line growth as a result of CapEx in the prior year?
Bookings is number one, revenue growth, and then CapEx in that order.